The Fed just cut interest rates. And if you're thinking, sweet, this means lower payments, right? Not so fast. What the Federal Reserve actually controls and what it doesn't could mean the difference between making a smart move right now or waiting and losing buying power. Hi, I'm John Money McKinley, your go-to mortgage strategist and the host of Real Talk with Real Estate Pros. In this video, I'm going to break down what the Fed rate really means and why mortgage rates don't always follow and what smart homeowners should do right now. And no, this isn't hype or headline talk. This is what's actually going on behind the scenes. Here's the deal. The Fed recently cut federal funds rate. That's the interest rates that banks charge each other for overnight lending. It's the short-term rate, and it's used to cool inflation and stimulate borrowing. But here's the key. The Fed doesn't directly control mortgage rates, in theory, but that's for another video entirely. I repeat, just because the Fed cut rates doesn't mean your mortgage rates drop the next day. And anyone telling you otherwise is selling headlines, not the facts. Mortgage rates, especially on the longer terms, like 30-year rates, are influenced more by the bond market, specifically the 10-year Treasury yield, than by the Fed itself. Let's take a look here. This is what the 10-year Treasury rate is looking like today, 4.144. This is going to move up today. This is going to move down today. This is typically what to look for on what's happening in the world of mortgages. Just to give you some point of reference, last week when the Fed dropped the rates, before they dropped it, this rate was almost below 4. As soon as the Fed dropped the rates, this started climbing back upward. Okay? Typically, when this rate moves up, interest rates follow for mortgages. Typically, when this rate moves down, interest rates follow as well for mortgages. Now, there are other factors that are involved in this, so please don't think this is the only thing that factors into it. Investors look at inflation expectations, global risk, economic data, and hundreds of other signs when pricing out mortgage-backed securities. Think of it this way. The Fed controls the steering wheel, but the road mortgage rates travel is full of curves, speed bumps, and weather, all out of the Fed's control. Here's the kicker. Even with the Fed making moves, the mortgage world does not always move in sync. Sometimes a Fed rate cut spooks the markets, and bond yields go up, pushing mortgage rates higher, not lower. That's why timing the market solely based on what the Fed does is risky. Instead, smart buyers look at their budget, their timeline, and their local market opportunities. And homeowners, with the right guidance, this could be a great window to explore other options, especially if you've got some high interest rate credit card debt that you'd like to eliminate and give yourself a little more cash left over at the end of the month after you get paid. Or if you bought at the peak of the mortgage cycle, market cycle. One of the biggest myths that I've heard most of my career, and I've been helping people with home loans since 1999, if I just wait for the Fed to keep cutting rates, they'll drop and I'll get a better deal. Truth is, markets are typically forward-looking. By the time the Fed cuts the rates, the bond market may have already priced that in. The perfect timing strategy, look, it usually leads to missed chances and regret. Don't chase the rate. put yourself in a position with strategy and options. If you want clarity, strategy, and real-world options, no headlines, no hype, schedule a free home buying or refinance consultation with me. I've got the link in the pin to the first comment below. Just click on it. Let's set up a free 15-minute consultation. Look, if you found some clarity, do me a favor. If I've given you some insight, hit the like button, subscribe, drop a comment. I would love to get your thoughts. You think the mortgage rates are going to be moving upward over the next 6 to 12 months? Or do you think they're going to be moving down? Let's talk about it in the comments section. And if you know a realtor or a home buyer who's getting all caught up in the Fed headlines, share this with them. I'm John Money McKinley, and I'll see you on the next episode of Real Talk with Real Estate Pros.